Okay, so we're going to have a fireside chat now. We have Christopher Colosi from Gloebit. Chris, you're a teacher, a software engineer, and an entrepreneur. Would you like to tell us something a bit about your background to start with?
Sure. And the teaching's a bit of a passion. I come from a family of educators, and yet I decided I wanted to make some money. So I do that on the side. Highly recommend it. So I advise some startups. Little shout out, Network for Teaching Entrepreneurship is a nonprofit. I help coach and instruct students at high school that are learning to put together business plans and compete. So great for anyone in the San Francisco Bay Area, take a look. My background, come out of, I managed to go to Harvard University, come out of there and start a video game and graphics technology company with 5 guys, 4 other gentlemen, myself. And we spent about 4 years putting together a game and doing kind of cutting edge graphics, outdoor lighting. That was acquired by Linden Lab, the next company I went to. That was also really where my finance background started. Having 5 engineers start a company means that someone needs to jump into doing the books and negotiating deals. So I was one of the 2 folks who did that. Linden Lab is they're the makers of Second Life. They are still around. They were really big in 2007. Joined a company that looked like it was going to go public. Is kind of more of an MMO now. So my time at Second Life, is where I really built my experience for what I'm doing now. I managed some virtual goods marketplaces, acquired one for the company, spent over a year managing Linden Lab's Second Life economy, which was about a $500 million economy when I was there. Maybe $150 million a year went through our Linden dollar exchange. And I was essentially the Fed and the Treasury of Second Life. I chose when to print more Linden dollars, how to release them into the market, and really dug in. We had access to a ton of data that I dug into on just how people acted in the market, where there was potential fraud. It's just an interesting way to study an economy. And one of the biggest things I learned was there's really no such thing as a backed currency anymore. Currencies are built on trust. It's an interesting circular logic puzzle, if you will. What's the value in a currency come from? It kind of comes from the belief that there's value in that currency and stability. So after about 4.5 years at Second Life at Linden Lab, I decided I saw currency as the next big thing, something I wanted to jump into, and I left and founded Gloebit. So this is my second startup. I think maybe I need one more before I become a serial entrepreneur. I'm not sure what number that requires.
3, maybe.
3, maybe 3. So maybe I need to close this up and start another one. But I've been doing that for a couple of years now. Probably got about 1.5 years in engineering work that we put in. We recently launched a product, and that is a digital currency web service. Really pulled all my knowledge from Second Life, a bunch of research afterwards, and put together a product to make it simple and easy to do global transactions. We see there becoming a global marketplace and a need, and as a lot of other folks do with Bitcoin and various other products coming around.
I'm going to come on to Gloebit. But I wanted to ask you, because you're a virtual currency entrepreneur, actually what you think the whole virtual currency sort of scene looks like. Because there's a lot of stuff going on. There's Bitcoin and Ven and Ripple and all sorts of. There's protocols. There's a blockchain protocol.
Yep.
There's a whole bunch of virtual currencies. You mentioned Linden dollars. Bitcoin's the sort of most prominent, perhaps,
yep,
in the scene. So what does the whole landscape look like?
Sure. I tend to separate into a few different buckets. One is platform specific versus not. So the Linden dollar is a platform specific currency. It's only usable there. Right. Facebook got rid of theirs, but I think it was the coin or the buck before, if you look at that, Amazon coin. There are a number of people who've created a currency specific to their platform. That space is always going to have a market. It's people building that market, and they're unlikely, in my opinion, to expand. There's a big hurdle to get competitive platforms to pick up your currency. Unless folks want to talk more about those, I'll put those for my assumption in a box where they'll always make some money, but that's not the global solution. Then you have white labels. Those end up becoming platform specific. So in the global currency space, you've got Bitcoin, you've got some followers on, you've got maybe Ripple. Gloebit is in that space. And to date, I haven't seen anything in the cryptocurrency space in there. You know, what most people focus on are what I would call a cryptocurrency as an area, which are peer-to-peer based on cryptography. And people tend to look at alternatives. I think one thing is when you're looking at alternatives for Bitcoin, think outside the box. Don't think minor variation. Think, you know, what's still making that approach but major. You know, Gloebit is a centrally managed currency. You look at Ripple, you know, in my opinion, I see a private solution that I can't see a ton of benefits on top of a Bitcoin. When I look at some of the followers on, I haven't seen anyone that's made enough modifications to show me why they would be dominant over Bitcoin in that space. I think there could be a few that survive. I think it's best if it's one or two, if they serve different spaces. There's a lot of savings, there's a lot of value to the economies of scale you get out of a single global currency. So, you know, I do think there's space for a cryptocurrency and a non-cryptocurrency in the same way that you walk into a store today and you choose to either pay cash or credit. And there are times when you want to pay cash and you don't want a record of your transaction. And I think that's when you're going to want to go use a cryptocurrency. You know, my opinion, and think for yourselves, what last time you walked into a grocery store, did you choose to pay in cash or credit? Most folks, you know, most times want to have a record of the transaction, want a simple transaction. And I think it's best if there's one solution that serves that. We'll see. It's a hard space to judge. If I knew it all, I would have, I've been following Bitcoin since about 3 cents a Bitcoin, and I guess I would have bought a bunch at that time.
Did you?
I did not. I definitely knew it would go up. I will admit I thought Bitcoin would crash before it has now. So it'll be interesting to see where it goes.
I checked it out. I think it's like £300, which is like $500. Is that right?
Yeah, and it got up to about 1,000 at one point.
1,200 tip top. Is that right? So let's move very quickly. Gloebit. So I'm going to ask you. Okay, so you have a new virtual currency. Is it cryptocurrency?
No.
No. Okay. And so what's unique about this? And why is Gloebit going to rule the world?
Sure.
And Bitcoin's not?
Yep. So we are what I would call a centrally managed currency. So very similar to a government issued currency to some extent in the fact that there is a central authority. Bitcoin is based on an algorithm that anyone can look at essentially and see how it's working. For us, every transaction comes through our system. So like I said before, it's much more like making a credit card transaction in a store. We track everything. One big thing is what do consumers and merchants really want? And so it's great when you do something new and advanced, and I think there's a space for Bitcoin. But most consumers don't want anonymity. They want ease of use, and anonymity tends to make things harder. Most consumers, most merchants don't mind if someone's an authority. On top of that, you have stability. Stability within the Linden dollar at Second Life, within most governments, is managed by someone who chooses when to print more currency. With Bitcoin, you've seen a lot of spikes and crashes. Every time demand increases, there's an algorithm that creates more currency for Bitcoin. That algorithm doesn't adjust. It's not to say someone couldn't create one. I think it's pretty hard to judge ahead of time when you're launching. But Bitcoin, for instance, doesn't adjust when they get an influx of users. It's based on time. Yeah. So you get a bunch of demand and you get a spike, and then you end up with too much value and you get a crash. At Linden, what I actually did was assess what is the right amount of currency growth we have. If you think about it in terms of an actual population, how much money do you feel comfortable having in your wallet? If everyone in your economy needs to have $20 or $100 in their wallet, you need that much currency out there. Otherwise, people get worried they don't have what they need to spend. The other thing is that it tends to be based on your GDP, or it should be, and that gives you stability. Bitcoin, in a lot of ways, is more like a commodity since it does rise in value. A lot of the usage that I've seen, talking to economists, looking at charts, most people are investing, not spending. So you've got a different usage. It doesn't mean it won't come around and it won't become a currency that more people use for commerce. But I would argue that most folks buying Bitcoins right now are speculating on the rise of value, or are doing commerce in illicit activity than they are in legitimate activity. We're focused on legitimate activity. Our goal is to make it as easy and simple for developers to use and for consumers to use. So You can buy in with your standard payment methods from our website via credit card, Amazon, PayPal. We actually accept Bitcoin, and takes a few seconds, and you're in. Create an account with an email address, and you have Gloebits. Our merchants, we create a platform that gives them that payment processing access, and I'd argue you probably integrate our systems in a day, certainly a week in the longest. For anyone who's done payment processing, it can be weeks or months per payment processor you integrate. And so we're trying to make it simple on the merchant side. They price in our currency, and we move, and we give them a simple way to accept that. So we're trying to make monetization better, simpler, and cheaper for them so they can focus on their products. It's not to say there aren't challenges, because with any currency you still need to get usage on both sides, and it's hard to build that. And that's the stage we're at. We're early stage. We've recently launched. I think we have the right fundamentals to grow, but we still need to prove that. Bitcoin is large right now, but they actually haven't made it easy to use. If you actually think about, if you choose to accept Bitcoin on your site, I was talking to someone about BitPay earlier today, I don't think it will get you a lot of actual users that aren't Bitcoin users to go out and get Bitcoins and buy on your site. It will likely mean that some people who have Bitcoins and want to spend them might choose your site or might go, awesome, I'll use this instead of a credit card. In the long run, we have plans for how to get rid of currency conversion fees country to country, how to reduce payment processing fees overall. In the short run, we're focused on microtransactions, a lot of that through gaming and entertainment apps. People in those industries, and it's where I have experience, have learned they monetize better off 10-cent transactions than they do off a $60 game on the shelf. But to do that, you need to enable them to charge someone 10 cents at a time. And that standard there is through an intermediary digital currency. So we're looking to launch there and grow our both consumer and merchant base in that space so that we can then expand, bring our costs down enough to compete in the general payment space.
Okay.
Rough idea?
Rough idea. More like a more professional version, basically, of the existing.
And we do more than currency as well, I should mention. Since we're focused on making things simple and easy to use, I don't want to force anyone to use things. I don't like platforms that do that, but my co-founder very early on said, here's some of the stuff I would want in addition. So we've got inventory and entitlement solution. We have user ID aggregation if you want to use us so you don't need to create user accounts, character creation. So we've created some other components as well that we know a lot of developers really don't want to go out and have to build those solutions themselves.
Sure. Okay, so I'm going to take you somewhere else now. Okay, so this is everyone knows about empty GOX and Bitcoin, right? And the Japanese exchange have basically disappeared for a while, and all the money's lost.
Yep.
I think the Japanese authorities are saying you have to put your claim in by some date now if you're going to get your money back or whatever it might be. Anyway, a whole bunch of money disappeared. So how do we know this is not going to say, Gloebit, where is our money? I mean,
sure.
why are you any more reliable than say empty GOX?
Sure. Quick question. Anyone know what Mt. Gox actually stands for? Where the name came from? It was a Magic the Gathering card exchange originally. That's what Mt. Gox is. That's what I've heard anyway. You can check it up. It was initially a place where they exchanged cards. They had the software, and when Bitcoin got big, they said, to some extent, maybe that should make you think it wasn't really built to handle financial transactions. But it was interesting when that happened. I got a lot of questions from folks to say, why are you any different? So I've given it some thought. On the one hand, one piece is just general security. We built ourselves to be secure from day one. My co-founder built the single sign-on system for Second Life that handled millions of users a day and multiple pieces hit. It's one of the reasons we got together as a group to build this. He's done a lot of sysadmin stuff. So we go out and he's constantly talking to folks in the community about how to be secure. That's not to say you can prevent yourself from being hacked. We built reconciliation services from day one. So right now our systems reconcile themselves to the Gloebit once a day. We can make that happen once an hour. We started by writing the transaction system, data storage, and myself having been involved at this, done bookkeeping. If you guys don't know what reconciliation is, it's basically what you do at the end of every month with your bank statement and your ledger and your checkbook and make sure everything adds up. So, we've had a couple of times when we were in development, we released something and, 2 hours later, my engineer said, oh, we've got a bug because this doesn't add up. So one is that we'll spot things quickly. Everything's encrypted in the database, so it should be much harder for someone to, say, break in and do a data dump. I think the biggest thing for me is that if someone did do that, since we're a fully tracked system, I thought about, you should always think about the case where you couldn't prevent it, what will happen in that situation. And I came up with 3 scenarios that to me say we're much less of a target than a Mt. Gox. One is if someone was to break in and move a bunch of funds somewhere, unlike a Bitcoin transaction where it's hard to know where something went, and take the money back, we do all of our, we track every transaction through our system. That transaction has to exist there. If it does, we can see that a bunch of money got moved, we can get complaints in, and we can just pull those funds back. We restrict how money exits the system. We know who our parties are that can remove money, who are our merchants. So those are folks who've given us a tax ID, an EIN or social security number. So it's far harder or less likely they can do something like that without being caught, without doing serious ID theft as well. And so we can reverse transactions on our end without a problem. If they've removed that, we can rebuild the transaction system. We can see it doesn't add up and figure out what's missing. I think the only way we wouldn't be able to fix our database and recover people's money is if someone removed enough transactions, enough of our history, and erased enough of our databases that we can't track that. And at that point, you're destabilizing our system so much that you have to ask, are those Gloebits worth anything at that point? So if you've removed enough of information from our system so that we can't fix what happened to Mt. Gox, you're likely stealing something that's no longer worth anything. So I'd say we're much less of a target than a cryptocurrency is because we centrally manage and track all of our transactions.
Okay, good answer. Here's another question for you. If Gloebit's going to take over the world, Vietnam made Bitcoin illegal, and I think China too, Russia, a few others, and plenty of others where it's pretty grey. So you're going to face all the same problems. If Gloebit's going to become a global currency, or the global virtual currency, how are you going to deal with all these countries and all the regulation and so on? You're faced with exactly the same problems that Bitcoin hasn't passed. So what's your plan here to get past all the regulatory issues?
Sure. To some extent, it's a step-by-step approach. There are going to be countries that are challenging. If China wants to require databases, for instance, in their country borders, can we do that? Can we trust that things won't get hacked? Can we do something securely? One area where we do have an edge is Gloebit isn't run by a company. It is something out there for anyone to use. So, who's going to make a deal? Is there a platform that could get it into a certain country? Perhaps someone else building a service on top of Bitcoin. We are a single company, so we can go in. In the U.S. right now, I've been approaching lawyers for the last year. I've had experts write us opinions, and I've been involved with the Applications Developers Alliance, who does policy work, to be on the right side of policy issues, to be in front of statesmen and be able to work with them when they want something. My argument in the U.S. would be we're a far better solution, controllable solution than a cryptocurrency. We can track and discover money laundering and prevent that. And I've had payment processors ask us about that, and I've answered those questions to their liking in order to have them in our system. It's not something I can guarantee with every country. What makes you global? We'd like to be in every country around the world at some point. Ideally, you get to a point where you're so large that some country needs to look at how much are we hindering our own economy by not accepting it. You look at the euro, and you have folks that were working very hard to get included in the euro because when you're within a single monetary system, how much it enables trade and commerce and builds your economy. So, if I wouldn't be focusing on a country like that on day one. We're going to go everywhere that is simple to go first, build up a system that works, and then we're going to tier stuff by what has the largest market and what's the easiest to go into regulation-wise, and we'll approach them, with a product manager and legal experts for that country when we get there.
Okay. Final question about the end game for virtual currencies, specifically, or maybe in your answer, What about fiat currencies? Are they all going to disappear? We're going to end up with world reserve currency, which is Gloebit or something. And what's going to happen to MasterCard, Visa, and all the other payment processors here today? Back in the UK, we have sort of Bax, Faster Payments, Chaps, there's Swift, there's a whole ton of companies who make their living out of making payments. So what's the end game for all this? Is it going to be virtual currency, world reserve currency, or something of that sort?
I do think that most major countries will keep their own currency. I think if you look at the euro, it's a good example of a mistake to move completely away to a larger currency. There is a benefit to being able to manage your debts within your country with a local currency. I think there's ideally a single secondary currency that has an exchange with every currency around the globe. And if you come from a country, you know the exchange rate the same way that for me, I know what $3 is worth, what a gallon of milk costs. You have a concept of an understanding for a pound, you'll have that for a digital currency. And when you're local and you're dealing with a brick and mortar store, you'll have the option to use either. And when you're traveling, it's going to be very simple to use or to have payment cards associated with that single global currency when you're buying things online to see prices in that global currency. So I don't think governments, except for small developing nations, will look to get rid of their currency. I do think that it will be a centrally managed currency. I just see a lot of problems. Like I said, I've talked to economists about Bitcoin. There's a lot of questions there. People see it as free, but if you actually look at the cost of the system, right now, people are paying, I've been told, $30 per transaction. Given the production of new currency associated with solving cryptographic equations. Not to say that's what the cost needs to be, but it's unclear what that will come down to. With a centrally managed currency, we're doing a ledger transaction in the cloud. We can keep it very inexpensive. I think for people importing and exporting importing components, producing a good and exporting them, there'll be huge gains in the order of maybe as much as 20% savings on products that are doing that. Right now there can be 2 currency transactions on an import or an export. It can be 5% a piece or paying banks. What was some of the other aspects of your question?
What do you think about the existing payment processes?
Yeah. So, I've actually had some conversations with banks. I think it was Danish actually are very active with approaching new tech. So I sat in front of some bankers maybe last year, and they're really interested in this space. I think you'll see banks come around pretty quickly and consider, as something becomes dominant or a few things become dominant, to offer accounts. I don't think any currency, we're looking to have a central currency, but that doesn't mean we need to own every aspect. So I think you'll see banks that'll offer accounts, savings, checking accounts in digital currencies. I think if banks offer better systems for ACH payments, I know in Europe you've got some of that, especially I think I've seen in Germany. In the US, we don't do it very well. I think a lot of folks will move to those systems away from maybe credit card purchases to move money in and out of systems. So banks have been pretty interested in approaching the space. My understanding is they've been kind of taken out of the mind share of purchasing flow with credit cards, and they're looking for ways to get back involved. And digital currencies are a way that they can get back into the mind share associated with a bank. On the credit card side, I think you're going to see a lot of resistance. And I think I don't know who will still be around. I think digital currencies eventually, you're talking the 10 or 20 year span here, can reduce overall, even on large purchases, payment fees down below what credit cards charge. At that point, you're going to see, do credit cards wait too long, and do banks start offering the service, or do some of the existing companies come in and say, great, we're going to offer credit within digital currencies? So we're selling upfront to consumers, but what's to keep a credit card company from coming in and saying, I'm going to offer you credit, Gloebit's for credit, that you don't need to buy up front. You can spend off of a balance that we've created, and we'll bill you at the end of the month and charge you interest on that. So I think you can apply it into the space. I can't say that credit cards will just go away. There's a zillion, payments is crazy right now. There's a zillion brick and mortar payment options. And at the end of the day, it comes down to what people are used to using, what they're comfortable using, and what they have incentives to use. credit cards have done something really bright, which is, at least in the U.S., their policies prohibit you from passing the fees along to consumers. So consumers in the U.S. have no incentive to move to a lower cost method. So it's one of the reasons it's been a real hard struggle to push people to move to anything else, even when folks provide far lower cost mechanisms. And for a merchant, you need to accept what your customers want to use when they come in. So
it's a very good point. It's a very good point. Thank you. Any questions for Chris? Any comments?
I got one question,
Yeah.
Chris. So just as a consumer, I log on to Gloebit. What can I do like today?
Sure.
on Gloebit?
You log into Gloebit. You can buy Gloebits directly from us from a number of payment methods. All your US dollar, all your real world currency right now, all US dollar, eventually will be expanding to accept other payment methods and international methods, would be directly with us. And so you'd buy Gloebits, you'd end up with an account. Anyone using our system, merchants, so we're focusing B2B, market to bring developers on, that chooses to use us. When you are in their site or you go through an app discovery section of our site to find them, you link your Gloebit account to your account in that system. Very similar to giving approval, it's an OAuth transaction, giving approval to someone to have access to your friends list on Facebook. You'd be saying, great, I want to give this company access to my Gloebit account, okay? So you buy with us, you give access, you can manage that access. So one of the security or safety measures we put in that I think is a big advancement over most payment methods is you do something once and you decide you don't trust or like that company, or 3 months later you stop using something and you don't want to worry about a charge down the road, you can remove that access. They have none of your payment information. You're anonymized to them. So at that point, you've taken away access. If you give access, that app has access to see your balance so they can display it and do a pull transaction, essentially. So similar to a credit card, they don't need to send you to our site every time you're purchasing. If you have enough Gloebits, you can just buy things from their site. You're also only ever risking what you've purchased in Gloebits, not some crazy high charge. You can manage you can see your whole transaction history, you can export that. So you can go back and review, you have all your transactions in one place, you can dispute a transaction. And that is probably the main functionality for a user. So it's similar to a credit card or a bank site in terms of functionality, or a PayPal site, Google Wallet.
And do you guys make money in the conversion of dollars to Gloebit, or just similar to credit cards, like you take some Gloebit percentage of the vendors?
Sure. We make money in 2 spots right now, and eventually we want to move toward just one. So right now, when a consumer buys in at the front end, we do have a bit of a margin of profit. So that allows us to do 2 things: incentivize the users to buy more at once, which cut our payment processing costs down, and it covers fraud costs and gives us a bit of a profit. And that's where we are, if you're doing $100 transactions, you'd be losing money on our site over just going with credit card. But anything probably south of $5 or $10, you'll do better with a micro transaction system. So we make some money there. Eventually we want to bring that down to maybe taking a loss there, and I can go into how we'll do that. The other area, which is the main goal long term, is we take 2% on Gloebit transactions. That comes out of the merchant side. I expect to bring that down. We're launching an area that I think should be comfortable, and as we see where our costs are at, we'll look to bring that down. I expect we can get at least to 1%, if not below. And that's where we want to make our money long term. We do foresee that as we get onto platforms, for instance, we've been building a plugin for Unity. Our hope is that platforms not only want to adopt Gloebit, but see that as the right way to monetize. If you're building a development platform, a game engine, a distribution platform, that a great way to monetize with a reasonable percentage. So we take 2%. I could imagine someday that a Unity says, hey, for someone that's built on our system, or a Steam, for someone that's distributing through us, we'd like 2% for ourselves. So we would manage all that, and we would pull 4% out in that case, 2 for us, 2 for Steam from the merchant. In the long run, if we can get out of just gaming and get into real world goods, imagine that as a company you can pay your Amazon AWS tier in Gloebits, that you can buy the hardware you need, that maybe you can pay an employee in Gloebits. We get to a spot where money cycles within the system. And so for every transaction with a payment processing fee on, we get to having 5, 10, 20 transactions in our system that we charge in system fee on. And at that point, we can get rid of our fee on the front end. And I mentioned that it might sound unrealistic. At Second Life, we only had about 1 million users. We were a single platform that was user to user, and we probably saw an average 5 to 7 transactions of Linden dollars between entering and exiting the system. So that was a very, very small economy and set of users. So you can imagine that it's pretty reasonable that we can get up to that point where we can remove our fees on the front end or even take a loss on the front end.
Okay. Chris, thank you very much. Thank you very much.
Cool. Just quickly, if anyone's looking to do microtransactions, gaming, monetize, please reach out. You can reach me at chris@gloebit.com or check out our website. And we're willing to help anyone integrate early on. We have a big focus on our early partners. So you get in early, you get some help from us, and you'll get free marketing from us pushing the early partners on our site.
Thank you very much.
All right.
Thank you.
Thanks, everyone.
Okay, guys, so we now have Ben Weiss from MoneyWorks.
Okay. All right. So thank you very much, Eddie, for planning this event. So I'm co-founder of MoneyWorks, Ben Weiss. Our mission is to help users make the most of their money, initially to get out of debt so that they can achieve their goals. We do this by taking advantage and optimally using new technologies. First and foremost, user-centered design focused on the user's problem, geolocation and geofencing technologies, personal data insights, and the automation and integration of the software and the financial account. A user comes to our service and they have an easy sign up. We ask them for their goal, initially focusing on debt reduction. We have them aggregate their single primary account, and then based on that, the user can select how slowly or aggressively they want to pursue their goal. Then with this information, we've distilled all of their money management down to a single number to achieve their goal. Our inspiration really being the Nest application, where all you need to know is the one number for how you're doing and what you should stay on track for your budget for the week. Our solution is oriented towards achieving a single financial goal of paying down a user's debt. And every way we interact with the user is toward achieving that single goal. What distinguishes our service, however, is the geolocation alerts. So instead of just reactively telling a user how they manage their money, we proactively influence their behavior so that they can achieve their goals. When we see that someone is moving in a retail area, we proactively let them know how much money they should spend on lunch and places that they should go for lunch that would stay within their budget. When they enter the institution, the establishment, we're giving them a proactive alert, telling them how much they should spend, how much they have to spend in that category, kind of foursquare for your money. And then we have data insights that help people to optimize their lifestyle to achieve their financial goals. So we see where you live and we see where you work, that you've been going to the expensive gas station close to your home, that we can then have insights to tell you to stop at the gas station on your way to work and you'll save $12.32. And finally, that we'll have proactive alerts that help you to avoid problems. If we see that you're going to be over for a bill that you've received, we can then proactively alert you to take action. So kind of helping users to always make the most of their money. So then as we've engaged with the user and we progressively increase our relationship, our goal is to then allow them to take all of their money management to MoneyWorks so that we manage their money for them. And we do this by integrating our software layer with a financial product, a prepaid debit card. The advantage of this integration of the software and the financial account are that we can then enforce their money plan into their lifestyle and that we can automatically and optimally pay their bills. So when a user direct deposits into the MoneyWorks system, we immediately reserve money for all of their bills and debts, and then the user essentially gets an allowance for their spending to keep them on track. and then they're engaging with the MoneyWorks interface to achieve their financial goal. All right. So that's what we're working on, and we hope to launch July 1st. So that's it. I'll now take questions. Yep.
You guys are currently opening the accounts with, your primary bank that you work
Yep.
with. For a lot of people these days, though, that does encompass multiple financial institutions. People may have multiple checking, savings accounts across.
Yeah.
It's much more difficult to handle the finances across those. So how do you guys anticipate, dealing with that issue and perhaps handling more than one financial institution at a time?
Yeah, so one account is really kind of for our MVP. I mean, I think you're absolutely right. Many people have kind of multiple institutions. We want to kind of our goal is to really provide value as quickly as possible, with as little effort. And so we kind of want to get on your primary financial account, and kind of then from there, someone could add secondary or tertiary accounts. But kind of our goal is to really kind of move them to the MoneyWorks card and platform where we can kind of most meaningfully optimize their finances. But so kind of focusing on just one account initially, just to kind of get them up and running and getting them value as quickly as possible, and then kind of over time they can add more accounts or move to the MoneyWorks card.
And just out of curiosity, from a monetization perspective, are you guys just going to be taking a cutoff of transactions that occur through the card, or you guys have other plans as well?
Yeah, that's right. So we're going to offer it through some institutions that may pay for that fee, such as employers or universities. We'd get interchange on the card, and then we'll be looking to optimize their debt obligations, so kind of switching them from high interest rate credit cards to low interest rate cards, or switching their home loans or auto loans, and we'll be kind of monetizing the migration of the accounts. But it's kind of in service of achieving their kind of financial goal.
Ben, thank you very much.
All right.
Thank you.
Thanks, everyone.
Well, guys, that's pretty much it, really. Well, I hope you found that quite interesting. I hope you found the Skyping quite fun.